Good morning, chameleons. How you doing, Dima?
Good morning, Will. Good morning, everyone. Thank you for joining.
It's Friday, D. You ready?
Friday, yup.
You ready to
Friday,
do a little?
big week today.
You ready to do a little COVID trick or treating tomorrow?
Yeah. Are you going trick or treating? I don't know if we're gonna have it tomorrow. I'll see. Because we're in Philadelphia. I don't know if they're gonna even have it tomorrow, but we'll see.
Yeah, no, it's a strange time, that's for sure.
Yeah.
I mean, the kids want to do it, but parents, I don't even know if there'll be candy. If you knock on a door, if there'll be candy. You know what I'm saying?
Yeah, I think my daughter said she might just go to her friend's house and they're gonna get dressed up and do that. Maybe just very local, go around the neighborhood. But I'll see if people are even opening doors and giving candy.
All right. Well, good morning, all chameleons. We have a lot of people on chat. Let us know if you have any questions in the chat. If you're new to our YouTube show, please subscribe to the channel. It's a big deal, and always thumbs ups are appreciated. With that, do you want to get started with the disclaimer?
Yep. So before we get started, everyone, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. So if you need professional help, contact your broker. They should be able to help answer your questions and provide you with guidance. That's what they're there for. There's the disclaimer.
Excellent. And what are you seeing this morning?
Let's get started. Let me share my screen real quick. So let's take a look what's going on in the pre-market hours. I think maybe we'll also take a look at what other earnings are coming up next week. And if we have some time left over, I'll go to that option repeat order screener that we wanted to do and go over any ideas or what's popping up in that screener. So this right now, this page, if you're new, we're looking at stocks that are actively trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. I'm going to take a look at what's going on in the higher market cap stocks. I'm going to use this filter and look for stocks that the market cap is $20 billion or higher. And we'll see what's moving here. So 9 of them made the percentage gainers list, 40 on the percentage decliners list. So at least from the market breadth, it favors more the bearish side than the bullish side. Google reported earnings yesterday. That's up 8.2% in the morning. We got a couple other ones. As we could see, there's a big earnings day yesterday. And then we got here Twitter, that's down 14.5% after reporting earnings. Team Apple down 3.7%. So a couple big earnings announcements yesterday. This is how it looks like in the morning. I would go, unless you have questions specifically about the pre-market report, I might just jump right to what's coming up to earnings. Or you know what? Let's do a couple of these. Let's take a look at, for example, Twitter. Now that's down 14%, but one thing keep in mind is it was up 8% just yesterday alone heading into earnings, and this stock actually has been on a tear between earnings. I know that it's made a really big move, and I was reading the report wasn't actually so bad. Maybe just the amount that these shares increased in between earnings. So here you go. Since the last reported earnings, it was up 36.4%, which was a pretty big move. That's like 2 times its average move, in between earnings. So on average, it would move up or down 18%. So that's 2 times its average move. Down 14%. Let me just take a look at how this stock performed historically after reporting earnings. So we see here, on average, it would gap up 1.8%, 64% of the time it was higher, 36% lower. The average move 10.4%. After opening up, on average from the open to the high, The move was 4.9% from the open to the low. Average move -4%. After opening, historically, it was down a little bit more often than up. 55% of the time it was down, 45% up for an average loss of 9%. And we see here, next day, 2 days out, tended to be weaker following the earnings. And let me just take a look here. This is how Twitter looked like the actual earnings moves versus the implied moves. So we see here, that's today I'm hovering over. If it opens up around here, down 17.5%, the implied move was 14.8% in either direction. So obviously that would be more than what the straddle was pricing in yesterday. And historically, that looks like, Twitter overestimated the move 38% of the time. The rest of it was underestimated. On average, heading into earnings, the predicted move was 11.5% in either direction compared to the actual realized move of 13%. So historically, that the magnitude of those moves have exceeded on average the implied moves. So that's how it looks really quickly on Twitter. I'm going to move on then to see what else is coming up on the earnings front, unless people have specific questions on stocks. I don't know if you see them popping up in the chat.
Nothing in the pre-market. We did have an interesting question. Pavel, who's a regular chameleon on the chat, at some point this morning would like to look at do a screener for spreads going into next week's election. So I guess anything that's you can play next week.
What type of spreads?
He was saying debit spreads.
Like a call spread, put spread?
Call or put spread, yep.
All right. Just if you could be more specific, that would be helpful, Will, because
all right.
There's
Pavel,
6 different.
You're on. If you want to tell us exactly what you want to screen for, let us know.
Yeah. Some people throw things, but there's 6 different types of spreads I could look at. One thing we did add, we've been pushing out some new stuff on a daily basis, and we promised on the screeners, what you'll see is we added one of the ETFs. This is here in the bottom, the Boss ETF. So if you wanted to screen by the holdings in this ETF, which are founder-run companies, so we got like Amazon, Facebook, Tesla, you'd be able to do that from here in ETF filter in here. And I think we've added it. Let me just take a look at bull call spread. So you could do that here, underlying ideas in ETF, and filter it that way. For some reason that didn't work on this one. All right. Anyway, that's the new filter that we added. Did he give any more clarity, Will?
Yes, he wants bearish put spreads, debit.
Okay. So bearish put spreads. Let's take a look at bearish put spreads. I'm going to use one of these. So right now, just so everybody sees what I'm doing is out of the screeners over here, these are the vertical spread screeners. We've got bull call spreads, bull put spreads, which are credit spreads, bear call spreads, which are credit spreads, bear put spreads, which are debit spreads. So this is the one we're on right here, bear put spreads, debit spreads. So you're buying a put spread with anticipation with bearish outlook. I'm going to use one of our preset filters here, and let's take a look at stocks that are in a downtrend. And this is scanning for stocks that are already in a downtrend technically, and where the put spreads are lining up with a positive edge trade. So over here, like for example, Bank of America, this is BAC, stock price 23.58. This is its market cap. So we're looking at November 20th, buying the 24.5 puts on the 23.5 dollar put spread. Right now is 59 cents. We think it's worth 66 cents. That gives you 11.9% theoretical edge. Historical win rate 64.7%. You got a little bit of a cushion here. So if it reverses from this price, got about 1.4% cushion to break even. If the stock just finishes right here, 23.58, That's a 56% return on capital at risk. Here we got AT&T. That's also in a downtrend right now. Looking at the November 20th expiration, buying the 29 put, selling 27.5 put, $1.25 debit. Sorry, it'll cost you $1.25. We think it's worth $1.33. That's giving you a 6.6% edge with a historical win rate of 79.4%. You got a little bit of a cushion here too. So if it reverses, does not go down, you have about 3.6% to the upside before you break even. If the stock just sits here, that's a 20% return on capital at risk. Looks like Cisco also made the list. November 6th expiration. So as you can see, all these over here, and obviously we got the election November 3rd, so these are going to cover that election. November 6th expiration in Cisco, we got buying the 38 put, selling the 36.5 put. Cost you $1.15. We think it's worth $1.34. That's giving you a 16.6% theoretical edge with a historical win rate 85.1%. Again, here you got a 3.1% cushion with the return on capital risk 30.4% if the stock just sits here, goes lower. ExxonMobil, that's been on a downtrend, and that's going to have earnings. That looks like it's today, right? Today before the open. That's looking at the November 27 expiration, buying a 34 put, selling the 32 put, $1.25. That's a 33.5% theoretical edge with a historical win rate of 83.3%. Did he have a specific stock?
He didn't. I think he was looking more at the election. And actually, we've had a lot of conversation. A lot of people would rather see the bearish credit spreads. Yeah.
So let's do that. Okay, so I'm gonna go here under the screeners, and this is another one. It's a bearish call spread. So instead of buying a put spread, we're gonna be selling a call spread, again with a bearish outlook. Oops, hold on. Let me see if all right, I'm gonna use one of my presets here. So let's take a look at. I got a bunch of them here. Let's take a look at the market laggards first. So these are stocks that have already been kind of lagging the rest of the market. So they've been weak already. And the idea is if they're already weak, if the market goes down, they're probably going to do worse than the rest of the market anyway. And if the market goes up, they're going to lag the market. So there's probably some downside potential there. J&J made the list. So let's take a look. Let's close at 137.42. We're looking November 6th expiration. We got buying the 143 call, selling the 139 call. That's a credit of $1.27. So remember, now we're getting a credit because we're selling the call spread. We're receiving $1.27. We think it's worth 59 cents. So you're selling it above the theoretical value. That's giving you a theoretical edge of 25% with a historical win rate of 79.3%. And here you got a little bit of cushion here. So if the stock increases, you got about 2.1% before you break even. After that, you lose. If the stock just sits here, goes lower, that's a 46% return on the money you have at risk at expiration. Bank of America, also on the market laggards list, looking at November 20th expiration, buying the 26 call, selling the 23.5 call. You get a 77-cent credit for that. We think it's worth 57 cents. That's a 11.4% theoretical edge with a historical win rate 70.6. And that gives you a cushion of 2.9%. And if the stock just sits here, that's 40.2% return on your money at risk. I'm going to keep this up and just show you guys really quickly another way to do that if you're just going through your, if you're just going through a bunch of different symbols to do it quicker. And once you're on that custom search, of course, you could just go through, like, look, when you're on this screen, you could look for, bearish opportunities. So this is what it's doing, is going through bearish opportunities, going through those screeners and picking them out for you here. Or if you already have ideas what you want to do, you could just say, well, show me. I could select, see from over here, I'm on the custom strategy. Here, I could pick a strategy like bear call spreads. All right. And then just type in the symbol you want to, like, for example, show me SPY, bear call spread. So now I'm on SPY. These are the bear call spreads. It filters from SPY. So 4 of them over here. Like, so for example, here, buying the 345 call November 20th, selling the 344 call. That's a 36-cent credit. Theoretical edge, theoretical value 11 cents. That's a theoretical edge 39.5% with a historical win rate 89%. And you got, like, you could read the report if you click on here, kind of read the analysis behind it. All right, and this, if you click on here, it'll take you to the options chain. Again, this is a really quick way to just do it by symbol. Like here, let's take a look at QQQ. All right, so I'm still on the bear call spreads here. So QQQ, we got November 6th, buying the 290 call, selling the 285 call, credit of $1.57. We think it's worth 74 cents. So that gives you a theoretical edge of 24.3% with a historical win rate 83%. There's another one here. You could choose buying 298 call, selling the 293 call. So that's a little bit more, even more out of the money. 60 cents credit. We think it's worth 12 cents. That's a 10.9% theoretical edge, historical win rate 98%. Here's buying the November 6th 284 call, selling the 280 call, credit of $1.74. We think it's worth $1.50. That's a theoretical edge of 10.8%, historical win rate 60%. And then there was another one down here, buying the November 20th 305 call, selling the 301 call, same month, 52 cents credit. We think it's worth 16 cents. That's a 10.3% theoretical edge with a 94% historical win rate. Again, this is if you didn't want to go into the screener and just wanted to do it single stock really quickly. Here, let's see, Twitter. So Twitter found one here. Obviously, it's already down, but let's take a look at Apple. So here, Apple found one. You could. We also put the long put.
So D, we're getting a question. Where did you get to this? How do you get to this trade idea tabs? I'm assuming this looks like it's just on the landing page, correct?
Yeah. So if you go on the land, like right here, this is the home page. I'll click on it again. And once you're on the home page, you have these tabs over here, which give you other ideas. So here you've got the most active stocks. So you could just pick the strategies. But you could just click through the most active stocks like Microsoft, Facebook, Tesla. If you want to look at seasonality plays, you could switch to the seasonality plays. I'm not finding anything right now. Bullish opportunities. So this is going to look for stocks that are in a bullish uptrend, bearish opportunities, stocks that are in a bearish downtrend, and then you got custom. All right, so the custom one is you could do whatever you want. You could look at through your recently viewed. So this is going to save, if you're looking up symbols, it'll save like your last 10 symbols. You could come back to it, look at recently viewed. You could do it by your watch list. So once you click on the watch list, just pick the watch list you want. Like here are my big data watch list. So Apple, Amazon, Microsoft, I could click through them. right? So if I want to do like a bull put spread, I could really quickly just go through and scan what if there was any bull put spreads in this watch list, or I could just do it by symbol. So like, let's say Roku, right? I'll click on Roku. I have it set to bull put spread, and there they are. So that's a fast way of just kind of going to a symbol and seeing what's popping up from the screeners.
Yeah, they love that. They love that, Dmitry. A lot of great feedback. Thanks.
Yeah, I guess that's why I wanted to, because we kind of go to the screeners, but if you're doing it quickly, I didn't know if people realize that this is a really fast way of just going through your stocks. So here's like Roku. Since I'm on there, you could take a look, but let's take a look at this. Here's 92%. So in November 20th, selling the 190 put, buying the 185 put, 95-cent credit. We think it's worth 42 cents. That's a 13.2% theoretical edge, 92% historical win rate. If you were just looking, like, for example, Iron Condor, some people, they don't care direction. They just think maybe it'll just sit there. If you think it's just going to, so here, if it doesn't find anything that hits the conditions, nothing will pop up. So nothing on let me see on the debit Iron Condor. So this is a debit Iron Condor. This is the perspective that you think it's going to actually move a lot. So it's looking for a theoretical edge where you think it might move a lot. And here you're buying out of the money put spread in November 6th, the 200 puts on the 167.5 put, and you're buying the call spread 124, 242.5, selling the 275 call for 980. We think theoretically it's worth $15.98. That's giving you a 63% edge with a historical win rate 58%. So that's how actually I found. Remember when the article I wrote that was on the Yahoo Finance?
Yeah.
So when I looked at it, I was looking at it from the perspective of movement, because I was thinking, heading into the election, let me see if I could find something with theoretical edge and you'll benefit like from a volatility or move. So I found it in here. So nothing right now is popping up in Debit Iron Condor, but this is where I went to find it. Let me see, Debit Iron Butterfly. Let's see. So nothing coming up. In other words, they're pumped up right now, nothing with theoretical edge. Let me see if there's a long call. Let me see long put, nothing. Bear call spread. So SPY here, some bear call spreads. Again, it'll only show up if it meets those conditions. It has to have positive theoretical edge.
Just so everyone knows, I just popped the link for Dmitry's article into the chat. If you want to see that again, it was a great article. Thanks for putting that out there, Demon.
Yeah, definitely. So I'm working on another one. So hopefully I'll have another one in like the next week or two. Just looking for different ideas what to write about. Anyway, so let's take a look what's coming up on are there any other questions? Did I help?
No, that was super helpful.
Answer the question.
A lot of thank yous out there.
Let's take a look at the upcoming earnings. So these are earnings coming up in the next 2 weeks. I'm going to look for stocks that on average trade 5,000 contracts or more per day. Let me just take a look really quickly. These are, okay. Let me just take a look real quick. So these are stocks in the last 2 weeks. Now you see these tabs right now. This is what's coming up in the next 2 weeks. But if you wanted just to take a look in the last 2 weeks, what's going on, I'm going to filter out. So this report here is like taking a look, stocks that reported in the last 2 weeks, what the options market were expecting, what actually happened, and what did the straddle do? Like, did the straddle make money? Did it lose money, and by how much? So over here, we have here Tesla. This is the current stock price. It's volume statistics. but it reported earnings October 21st. It opened, the opening gap was 4.6%. By the end of the day, it was only up 0.7%. The straddle was implying a move of 8.3% in either direction. So obviously that by the end of the day didn't move enough for that straddle to make money. That's a very muted move. And that straddle at the end of the day, if you bought it the day before, sold it end of day, next day, lost 71.4% of its value. So here I have it right now sorted by straddle returns. And it's a good way just to take a look what's been happening in the last 2 weeks compared to what was expected. Just to point out what's been going on in the market. So here in the straddle, I'm going to filter it the other way. So I'm sorry, sort it the other way. So these are some of the straddles were big. They were big winners from the long side. So here we have Snap over here. We saw that a big move here in Snap. It was up, what, 28% by the end of the day. The straddle was implying a 13.3% move. So that straddle returned a little bit over 100%. If you bought that straddle, it doubled. Intel, returned 100%. That's Nokia. So some of these straddles you see had some significant gains here. Anyway, we usually don't go to this screen, but I just thought it would be worth showing for people who are interested in that. Let's take a look. Previous 2 weeks. Sorry, these are stocks that are expected to report in the next 2 weeks. Here we have November 2nd, before the market opens. FE, what's that? So
First Energy, maybe?
First Energy, right. And if you guys don't know, I'm hovering over here, these little fact sheets. Whenever you're on the website, you're using screeners and you're looking at a symbol, not sure what it is, what they do, you could click on this little fact sheet and it pops open and it gives you all this information over here. The industry it's in, if you want to read about it, you could read what they do. You could see historical charts on the stock. You even have a table with historical prices on there. You could have a little what the options are doing. So you can see the volume and the open interest. There's lots of data here that you don't even have to move off the page. You even have a little snapshot of the options chain, what the options chain is doing, earnings, dividend. This is very helpful. This way, you're not forced to leave the page if you just wanted to see what's going on in that stock. Anyway, FE, that's expected to report November 2nd before the market opens. As of yesterday's close, the straddle was implying a move of 8.6% in either direction. That compares to a 4-quarter actual realized move of 2.5% and a 12-quarter average move of 1.6%. So we see here that's 6.1% above that 4-quarter average, 7% above the 12-quarter average. The high move on FE in the last 12 quarters, 7.6% after reporting earnings. CWH, again, I'm not sure what this stock, I'm going to just click on this fact sheet. Camping World Holdings. They sell residential vehicles. Not sure what it.
Yeah, it's an RV, camping gear, Airstreams, and I think, and Jake probably knows for sure, but I think that's Marcus Leona, who's has a show on CNBC where he invests in other small entities as well. But his main holding is Camping World. Okay,
cool. So they're expected to report Monday before I think that's Monday before the market opens. The expected move 15.7% in either direction. 4-quarter average move compares to a 4-quarter average move of 15.1% and a 12-quarter historical average realized historical move of 11.5%. So we see that's right now estimating 0.7% above the 4-quarter average move, 4.3% above the 12-quarter average move. The high move on that is 29.5% in the last 12 quarters. And well, I think we're right up against the bell now. So
We are. Great job. Lots of chat, chameleons. Awesome job. Please, some thumbs up would be great. And remember, if you're new to the channel, subscribe. You'll get access to all the videos. I did put a link to our video library from our site. That's super helpful for all your new chameleons to gain insight into how the chameleon works and just basic options information. Dima, great job, buddy.
Thanks, everybody. Have a great trading day. Have a great weekend. Hope to see you guys on Monday.
Happy Halloween, everybody. Stay safe out there.